Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Herd and Lanny, the best dividend investors out here in all of media, guys.
Right.
Again, we're coming back to you with a hot video filming here on April 21st because this stock is down 22% since last year, down 16% this year. And they were down again today to start the fresh week right after Easter, guys. And is it time for me to buy more of this stock?
Smash that subscribe button, everyone. Give this video a thumbs up. Holla at your boys. The Dividend Diplomats, the best dividend duo in the world. That's us, everyone.
That is Bert's intro right there, guys. No, but obviously there's no question, guys. There's this thing that's still happening called tariffs, and it's
What?
impacting industries, right?
What?
What?
I can't believe it.
Just said what? What news did we break 4 weeks too late? And there's a certain industry that not many people think or talk about, and that's the industry of trucking and transportation, specifically with trucking. There's a little stock that I've been talking about a lot here on this channel, and that is Paccar, ticker symbol PCAR. Again, if you don't know them, they're the Kenworth, the Peterbilt, those big semi trucks. They build those and sell those. And you've seen them on the highways. There's no ifs, ands, or buts about that. And it's interesting because they get parts from places, right?
If they do parts from places and things, they move things around in those big old trucks of theirs.
So so the question, right, Bert, is A, what is the impact to building the truck themselves? How much is it going to cost to now build the truck? And then it's what goods are they going to ship if there's not that much shipments coming in because there's less goods coming in from outside the border. So there's a lot of confusion, questionable variability within this industry itself.
Yeah, and I think the counterpoint to the last part, if things aren't coming in from the borders and getting shipped in, you're at least going to be shipping from within. You'll be going out from the Midwest factories instead of coming in. I was trying to
Yeah,
make a bad
you'll
joke,
be shipping from Atlantic City into Cleveland or from, the West Coast, over into Cleveland. And it's still going to take a semi truck, is what we're saying, possibly to get those from A to Z. It's very difficult, again, to set those expectations for what the impact is. I mean, and that's why the stock has truly traded down from such illustrious highs. And they've been hanging in the 90s quite a bit this year, but they're now back at $87.29. In fact, they actually hit a 52-week low at 85 bucks. It's Monday, so too many meetings today, and I missed it because 85 bucks is kind of that sweet spot of where I'd like to pick up a share or two.
well, don't worry. I think you might get a couple bites at the apple because I don't think tariffs are going away
You
anywhere.
mean you mean
Yeah,
it, Charlie?
I do mean it. I do mean it. But when we're trying to figure out if a stock's to buy, Landy, there's only one logical thing to do
Is you put your head in the toilet, give yourself a gosh damn swirly, and then see if the hair stays up.
here. I mean, I'm not sure what you do at your household, at the Lanny household. That's one way to solve the problem. I
You
was
mean to tell
personally,
me after all these years?
I've been analyzing stocks wrong. That's right. I was going to personally suggest run them through our dividend stock screener, which focuses on three metrics and the bonus metric. That price to earnings ratio less than the S&P 500. That dividend payout ratio less than 60%. That history of increasing dividends and that bonus metric. The dividend yield. Man,
Oh, yeah.
Laney, let's freaking run Paccar through our screener.
Let's rock them through, guys. And keep in mind here, they do pay an annual special dividend. We will put the most recent one in there, as well as the impact to the yield and payout ratio, guys. But they are traded at $87.29. The latest earnings expectations from Seeking Alpha, which has been downgraded by 15 analysts on the earnings, and there's only 20 that are following them. So 15 out of 20 decreased and downward revised the EPS projections down to 678. So their PE ratio, which I think was in 10 to 12, is now closer to 13 at 12.87.
That's interesting. Interesting. So the price hasn't fallen and it hasn't adjusted as much as the downward revision in the earnings per share because you saw that price to earnings ratio jump up if that last price to earnings ratio was closer to the value of the company. Interesting.
Yeah, yeah, it's pretty cool. You could check that out on Seeking Alpha. You can see like the changes in the earnings expectations for that current year, and then kind of like when they've changed. And yeah, they've changed, yeah, 15 different downward revisions from analysts this year, guys. So, um,
Not one, not two, not three,
three,
no.
one. But now, Bert, they pay a quarterly dividend. Again, we won't get into the special dividend. The quarterly dividend is 33 cents per share per quarter, or $1.32 per year. Even with the slightly lower earnings projection, it's still at less than 20% on the payout ratio. So very safe on the current normal dividend.
Love it. That's what you want to see. That 5-year dividend growth rate is nearly 11%, and they've increased that dividend for 15 consecutive years. So very, very strong dividend history.
Yeah, strong. And even with the 20% payout ratio, you can still increase it 10%, no problem. So I don't really foresee like a 5% dividend increase. I still see at least upper single digits, on a go forward basis from Paccar. But the dividend yield, again, it's not your high flying, high yield and reeling, dealing, stealing, Ric Flair in it. Woo! Dividend growth stock here. But the dividend yield is 1.51%.
Yeah, but you bring in that special dividend, you bring in that John Cena 17-time champion special dividend there to Ric Flair. They say you can't see this special dividend here because it's going to give you a $3 special dividend for that last one. That yield with the special dividend is nearly 5%. So that's right. That's right.
Yeah, almost 5% with the special dividend. Again, we'll show the stats here on the screen if that's not already on here. Even with it, the payout ratio with the current big special dividend, which I don't think it should be that high this year if they do one, is at 63.72%. Again, guys, this stock's almost 50 billion in market cap, down 22% since last year, down 15 to 16% this year. That is Paccar, guys. I think they managed their balance sheet well, and their operations very well, especially their financial performance. So, I think, yeah, at or around $85 a share is kind of where I'm looking.
Yeah, and just for me personally too, I like them. I talked about Amazon in my last video. They're not a bad option for some portfolio cleanup on a lot of those stocks in my portfolio I absolutely hate and I dread looking at. So moving to a place like Paccar, one that you like better, the metrics look better and make a lot more sense. It's always something I'm starting to think about now, especially as we progress along in 2020.
Love it. Love it, guys. Have you looked at Paccar? Have you guys thought about buying Paccar stock? Let us know in the comments. Let us know what other stocks you're thinking and you'd like us to actually dive into. Just we'll actually start building out and following through on a lot of lists. We have a bunch right now, and it's always looking at our own portfolio to try to fold those in. So, guys, we will come out with some more videos. So let us know in the comments, guys. What else are you buying?
If you haven't already, subscribe to the channel. Give this video a thumbs up. And Lanny, what do we need to tell all those diplomaniacs out there?
You're either with us or you're against us, Jack. That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.